I'm Karen Terry from McGrath Forest and welcome to our January market reviews. Whilst I don't want to talk too much about COVID, it's certainly here for a while longer and it will continue to impact our lives in one way or another over the next few years. When we look at how the local housing market has been impacted since the start of the pandemic in 2020, it's felt like a roller coaster ride. Initially, values plummeted momentarily as we faced global uncertainty and border closures in early 2020. And then property values locally increased up to 40% throughout the course of the pandemic over late 20 and across 2021. However, through 2022, these local property values had re-corrected down by approximately 20%. With the predicted increasing interest rates, it's likely there will be further softening throughout the year. It's interesting to note that some experts are now predicting that RBA will reverse their position and for interest rates to decline towards the end of the year or in early 2024. The current cash rate is sitting at 3.1%, and over the coming months there may be further increases until inflation moves down. Given the current inflationary pressures, it will be interesting to see if the RBA maintains its 2 to 3% target band. Thankfully, during the lockdown, many Australians chose to use surplus stimulus and extra disposable income to pay down mortgage debt or boost savings while interest rates were at historically low levels. This is certainly helping them now. And with thousands of Australian mortgage holders locking in their interest rates at ultra-low levels prior to the recent rate rises, it's unknown how many of those borrowers will struggle to pay the increased repayments when their fixed rate term comes to an end. We've seen in our business a large increase in investor activity in the property market. They're taking advantage of the price correction before the next growth cycle commences. Our local market, though, is predominantly made up of owner-occupiers, and many of these property owners do not have mortgages, so we may not see the same level of duress as other areas of Sydney and the broader Australian market. We're pleased to have listed a number of beautiful properties that are coming to market over the next few weeks, and we're always positive at the start of the year as there's usually an increase in buyer demand, in particular from those buyers who are unable to secure a property prior to Christmas and are keen to purchase as soon as possible. With further rate rises on the horizon, many borrowers need to buy before their borrowing capacity may be further eroded. It seems the initial shock of increasing interest rates has subsided and borrowers have factored in further increases into their budgets. So whether you're refinancing, renovating or considering selling, we're always available to provide up-to-date advice on current market conditions. So feel free to contact my team should you need any further advice.